The country's gross domestic product, GDP, grew by 4.23% year-on-year in real terms in the second quarter of the year, compared to 3.48% in Q2 last year, 2024, and 3.13% in Q1 2025. This is according to the National Bureau of Statistics, who said this on Monday. During the quarter under review, agriculture grew by 2.82%, an improvement from the 2.60% recorded in the corresponding quarter of 2024. The growth of the industry sector stood at 7.45% from 3.72% recorded in Q2 2024, while the services sector recorded a growth of 3.94% from 3.83% in the same quarter of 2024. In terms of share of the GDP, the industry sector contributed more to the aggregate GDP in the second quarter of 2025 at 17.31% compared to the corresponding quarter of 2024 at 16.79%. Joining us on the show to discuss the uptick in GDP, what it means to the economy, and if it is a function of the recent rebasing, is Dr. Ayo Teriba, an economist. Good morning, sir.
Good morning.
Always good to have you on the morning show.
Good morning, Rufai. Good morning.
Okay, Dr. Teriba, you have
yes,
had,
thank you very much.
Is it a function of the rebasing? And whether it is or not, should we be jubilating? Are we in a good place? Because I was saying before you came that, look, if they say non-oil sector is doing well, it's just telecoms, services, direct delivery services doing very well. Agriculture, which we've been saying is the mainstay of this economy since the 70s, the growth recorded is just 2.82%. There are economists like yourself who say that, in fact, this economy can do better. And so it's not enough, in the view of some other people, for MBS to come occasionally and say, growth in the oil and gas sector has rebounded, and we are meeting targets. Non-oil sector is doing very well. And then there's that proverbial, perennial, visible disconnect between what the statisticians and the economists say and what we see as lived, felt experience. Why is this economics that you economists of Nigerian variety talk about so disconnected with the basic economics that we all learned?
Well, thank you very much, for the opportunity to contribute to these very timely debates. And the question you have asked, two questions. Is this the result of the rebasing? And is this something to rejoice about? I'll try and address that. But context is crucial. Context is very important. The summary read out by Ayo for the overall GDP growth in Q2, 4.23%, compared with 3.5% the corresponding quarter of last year. And the breakdown across all the sectors speak to one issue, that GDP growth is accelerating, and is accelerating across all. There is none of the comparisons that she reported that doesn't show growth acceleration. After, 4 years, it was 2021, the last time we had 4% GDP growth in Nigeria.
Then. 5%. Base effect of COVID was 5%.
No, wait. 5% in Q2.
Yes.
And then 4% in Q3.
Yeah, so that was 5%.
Q3 2021 was the last time I'm referring to.
Okay, you want to compare
this
4%?
Yeah. So that the first time we're back to 4% level. Hopefully, with the growth acceleration, we might hope that things are approaching 5-6%. So, and that's the key point. And you need to situate this emergence of growth acceleration, first time in 4 years, in the context of the broader evidence that we have. At the turn of 2025, we have deceleration of the inflation rate. Again, the inflation rate for August is a 27-month lowest. You know, it's back to what it was before this new regime came, and the stability of the exchange rate, and the uptick in net reserves. So if you situate this growth acceleration in that context, you then are saying, you know, that we might be now at where Dr. Ngozi Okonjo-Iweala was suggesting we get to. That, okay, you have stability, now push for growth. That growth is here, that the economy has moved out of the risk phase, you know, dominated by instability and stagnation, to the recovery phase. Now, characterized by, you know, decelerating inflation and accelerating growth rate. And that's, if that's not what rejoicing about, I wonder what is. So the key question is, can Nigeria sustain this growth acceleration and keep the inflation deceleration at the same time, and also keep the exchange rate stability and hope for stronger reserves as CBN has to come to a decision later today.
All right. Thank you, sir. It still goes back to the question, and I think I probably asked you something similar the last time you were here, around how does this then translate to the improvement in the conditions of the Nigerian people? So we see these numbers, we see, you know, GDP growth rate, but unemployment, job creation is still not meeting, is not up to, you know, the expectations of Nigerians.
I'm with you, yeah.
Yes.
Yeah.
So how do we...
Cost of living is still high.
Yes, it's still very high. How do we translate...
Wives have not reduced chop money because the market is not smiling.
Valid point,
So how do
Ayo.
we and very quickly also, since it hasn't happened yet, do you have a time limit so that when we talk about patience for Nigerians, when it will begin to translate to reality for the Nigerian people?
Okay, Ayo, your point is extremely valid. We had this exchange the last time.
Yes.
And what I want you to keep in mind is the following. Even GDP growth is not a coincident indicator of economic activity. And it's not a leading indicator of economic activity. It's a lagging indicator. So you are measuring 4 this is end of Q3. And you're getting news about 4.2% growth for Q2. So you're getting it 3 months late. But the last time we were here, I mentioned certain indicators that were leading indicators of this GDP acceleration. The news coming out of the corporate sector, it doesn't really matter, you know, which sector you are looking at, whether you are looking at banks or you are looking at insurance or you are looking at pharmaceuticals or you are looking at, you know, petroleum refining, or you are, all of them seem to be getting back on the bounce after, or telecoms, after 2 years of, you know, being stuck, either because of exchange rate or because prices were not reflective of costs. So the evidence that the economy is entering the recovery phase has been mounting from the beginning of this year. And GDP growth is just another component in that mix. And so if companies are on the bounce, I also mentioned at the last time that even states are back on the bounce. The states, you know, launching terminals, buying 2,000 taxi cabs, launching hundreds of BRT buses, speak to the fact that they are generating employment. So if states are generating employment, companies are generating employment, companies are investing, states are investing, it tells you that these are leading indicators of not just growth, but also employment and well-being, that the well-being of Nigerians would improve, that you have moved beyond the stage where you should be talking about palliatives. It's no longer a palliative. It's about companies and states are already creating the employment that should bring relief long term.
No, so this argument is sort of skewed to me, because you're not also saying the fact that states are owing heavy salaries. They're not able to sort out salaries. Infrastructural development and infrastructural decay is still there. See, we have a false narrative in Nigeria because people are buying buses. It's not an indication of economic activity going on. That's That can be political show-off. Okay, you are buying buses for road networks that are not working, which is a real infrastructure there. For the fact that companies quoted on the stock exchange, that's not the proper sector, the real sector of this economy. These are agglomeration of companies quoted on the stock exchange. You and I know the games some of these companies even play on the stock exchange. So when we keep looking at these indicators, and that's why you see there's a disconnect between what you are seeing and what is happening to the real economy, like Dr. Bat is saying. We are talking about GDP growth, but you did also factor, and that's why when Dr. Bat asked the question, was it base effects? You did also factor the fact that the statistics and Nigerian products have tinkered with the way that these parameters are being calculated. They've dropped some weighted average, they've pulled in some new sectors and all of that. So, I mean, the argument is on both sides, and we need to see reality, because if the data is truly well calculated, we need to be able to see reality. Now, GDP is actually a good rebound. When you start to see rebound in other economies' GDP, you start to see the rebound in the life of the people.
Well, skepticism is another, Rufai. You've suggested that, the uptick in activity and investment in some of the states. I'm not saying that all 36 states are doing that. You probably have half a dozen, or a little more than half a dozen states that are in the lead. Yeah, you will find examples of states that owe salaries. Federal government, also has issues, with unpaid promises to doctors, to university lecturers, contractors, etc. So we're not saying that it's El Dorado, but we're saying that whereas the economy has been in the wood since 2021, that is coming out of you say the companies on the stock exchange doesn't reflect. If the companies on the stock exchange doesn't reflect the reality, if MTN and Airtel that had been making losses, the pharmaceuticals,
they've been making
if
gains.
they are now rebounding, that's good news for every one of us.
Let's state it the way it is.
Yes.
MTN had been making gains until the currency thing happened last year.
It's all right. And we're saying...
And afterwards, a year after they rebounded.
You can say the same about breweries. You can say the same about breweries.
It was just last year there was a drop.
Cement companies that are now...
making gains.
So let's acknowledge that whereas the news has been bad, without any light in the clouds, we've been dominated by negative. If you look at the indicators, all red in the past 2 years, that in the last half year, going to 3 quarters now, that the lights are, the red lights are going off, and the amber and green are beginning to show, and that we need to recognize that we moved out of that high-risk phase into a recovery phase. Okay. Yes, we're not, more to come for Nigerians, to feel it, but we've transited out of a risk to recovery phase.
Dr. Teriba, sometimes this Nigerian economies, people sound like native doctors sometimes. Trying to solve a very open problem with metaphysical approaches.
That's right.
What we are saying as the people of Nigeria is that whether you say it's rebasing or you say it is this or that.
I said it is recovery.
Whatever it is. Let us see the effect in the cost of living crisis. That's the reality that we know. Unless we see that one, all these statistics rebasing, MBS, this and that. We think
two effects: deceleration of inflation, acceleration of GDP.
No, I get the theory.
Let's hope that trend will persist.
I get it.
We'll see again in another quarter or two, and we will know whether the benefits are now real and evident for Nigerians or not. On that note, thank you.
Still a native doctor's prescription. If you use your medicine, after some time, you will see the effect. Thank you. Thank you, Dr. Teriba.